Welcome back to the channel, everybody. So we have some XRP news today, Bitcoin news today, BlackRock news today, Chainlink. We got a few things to get through today. So let's begin here. So this article is titled, Forbes senior contributor Billy Bambro has argued that XRP benefited from the $300 billion influx that hit the crypto market recently. Well, yeah, I don't understand what the argument is. Argument is about. When Bitcoin went up, everything else went up. This always happens. So at least that trend continues, and it's a good thing. So, I mean, I don't know what the argument is about. Does anyone believe otherwise? Everything gets lifted when Bitcoin goes up. We all know that. Liquidity comes out of it. People sell a little bit of Bitcoin. They want to play. They want to double their profit. They want to make profit elsewhere. Things of that nature. And we saw XRP price go up. XLM's price had also gone up. Right now, I think last time I saw things are down right now. You get a little pullback every once in a while. You saw Bitcoin hit $70,000 the other day. This is going to happen. But sure, yeah, I mean, I would agree to that. I don't know what the argument is, but let's read this little tidbit here. It says, in a recent publication, Bambro highlighted that Bitcoin and major coins like XRP witnessed sudden rallies. The Forbes senior contributor underscored that Bitcoin has surpassed $70,000 mark. Well, that was the other day. Like I said, I think today I saw it below 69,000 early this morning, but I'm not sure. Don't quote me on that, but I think that's what I saw. Everything looked red, red at the time. It says nearing its all-time peak of $73,850 in the last 24 hours. And then it says this, as we scroll past the sneaker ad. What sneakers are these? Never mind, it went away. Additionally, he pointed out that XRP and other leading cryptocurrencies have similarly surged, contributing to $300 billion to the total crypto market capitalization over the last week. As Bambro rightly pointed out, XRP recently ranks among the positive performers, reaching an intraday high of 65 cents. I will tell you this right now, though, even though that's true. And I mean, if you like this, I think you're going to love what happens in the future, because right now everything is coiling up. Institutional interest, from what I'm reading, is continuing to increase. I may have an article about that here as well in this video. So it looks like everything's about to go up again at some point in the next few weeks. We'll see if that actually happens, but this is what I'm reading, right? So if you like what happened these past few weeks, this past few months, you're going to love what's going to come in this next few weeks, next few months, if everything stays on the trajectory that it's on right now. So we're going to leave that one right there. I had another thought. I completely forgot what it was. Let's leave that one right there. Let's move on here, because we have something interesting going on. And I raised this topic, and I think it was yesterday's video. It was like something about a warning. Yeah, that was real. Like, some of these titles, these are taken directly from these articles. I don't know if people are listening to it or hearing. Look, there's something going on in the United States. The financial system is in trouble, folks. Big trouble. There's no way around it. I wish it was better. Then we could talk a little bit more positively about it, but we have to acknowledge what's really going on. That's how I look at it. So when there's something positive, we say something positive. Like, the new financial system is doing great. XRP, in my humble opinion, stellar. Algorand, new financial system, Quant, doing great. But when I look at the legacy system, I have to be honest. Now, if you have the IMF, that was what it was from yesterday's video. If you didn't see that video, check that chapter out. That IMF chapter is eye-opening. And this one is going to be as well, I believe. But when you have them saying, hey, the United States is in trouble, the dollar is in trouble, the rising debt is a problem, it's serious business now. It's getting serious now. Well, here in this article, we have this. This article is titled, Larry Fink joins Jamie Dimon. You got Fink and Dimon. And Jerome Powell is sounding the alarm. I might use that as the title. Something sounding the alarm. That sounds real good. It's pretty eye-catching, I think. Sounding the alarm on snowballing national debt. So wait a minute. See, we do a lot of good stuff on this channel. For 2 years, I've been covering the national debt and the global debt, right? And I was telling people way back then it was going to be a problem, correct? Now you see all of these so-called bigwigs saying the same thing that I already alerted everyone about a year ago. I wonder if people are going to listen now. There's a big problem coming and you can't get around it. When the big money has to start coming out and saying, whoa, there's a problem, you know it's serious business. It says here, this is a quote from them, from one of them. It says, quote, "The situation is more urgent than I can ever remember." You know, it's funny. A lot of people are still going to be relaxed about this and not make any movements, not protect themselves from what is coming. But let's read this little tidbit here. It says America's, quote, "snowballing debt," unquote, at $34 trillion and counting is putting the country on course to end up in a crisis reminiscent of Japan's lost decade. Now, you know what's crazy? A lot of people about a year and a half ago, people would say, well, the U.S. doesn't have to worry about its debt because it has the world's reserve currency. There's a couple of global reserve currencies. If you pay attention, you'll see that other countries' foreign interests are offloading a lot of their commercial real estate and a lot of their business partnerships, or however you want to phrase that. They're offloading a lot of what they own in the United States, right? That's number one. Number two, you'll see that they're starting to shift from the dollar over to other reserve currencies. There's like 7 or 8 of them, according to the IMF. So they don't have to use the dollar. The dollar just benefited from a lot of the U.S. dominance over the years, but now that dominance is starting to wane and be pulled back. So they're even shifting away from the dollar, right? Which is not just the BRICS nations. I was referencing other nations, but we could take the BRICS nations as an example, majorly shifting away from the dollar. The debt is going to hurt. That's why, once again, you had the IMF come out yesterday talking about the debt. You have Jamie Dimon. You have Larry Fink talking about the debt, which I had an article yesterday about Larry Fink's thoughts. I just didn't cover it because Larry Fink at the same time was using that to push a product that they're going to come out with, BlackRock, where they claim they want to help the people. You know how that goes. It's a money making thing. They're just seizing opportunity. But still, he's concerned about that. The fact they have to even take note of it means that it's a serious problem. And of course, Jamie Dimon. Right. So that now, you know, is getting serious. If they have to worry, I don't know why, like regular people, you know, and I don't mean that in a bad way. I mean, people that aren't, you know, leaders of multi-trillion dollar investment companies. I don't see why you wouldn't worry about that as well, or not worry about it, but like at least prepare oneself for what is to come. So now it says this, and Washington cannot take for granted the notion that investors will continue to fund its fiscal deficit forever, warns BlackRock CEO Larry Fink. The CEO of the world's largest asset manager also cautioned that the recent 3 percentage point increase in U.S. Treasury yields to 4%, which reflects longer-term inflation expectations and the Fed's aggressive interest rate hikes, is already very dangerous since it amounts to an extra $1 trillion in interest payments alone over the next decade. Quote, "The situation is more urgent than I can ever remember," unquote, Fink wrote in his annual letter to investors on Tuesday. Quote, "There's a bad scenario where the American economy starts looking like Japan's in the late 1990s and early 2000s, when debt exceeded GDP and led to periods of austerity and stagnation." Unquote. "The national debt is rising at a rate of $1 trillion roughly every 100 days. It's getting dire, folks, which itself is putting upwards pressure on consumer prices. That is partly why both assets believed to be inflation hedges like physical gold and Bitcoin, what some view as precious metals' virtual cousin due to its limited nature, are both at record highs." Did you hear about some of the Bitcoin people moving their capital from Bitcoin into gold? Protective. And then you hear what the central banks have been buying record amounts of gold. So it's all protective, folks. They're protecting themselves from what is to come. It says a high debt America would also be one where it's much harder to fight inflation, since monetary policymakers could not raise rates without dramatically adding to an already unsustainable debt servicing bill, unquote, he said. Fink joins Fed Chair Jerome Powell, JPMorgan CEO Jamie Dimon, Bank of America boss Brian Moynihan, and Elon Musk in sounding the alarm. I haven't heard anything from Elon, but maybe I don't get that news. It says, and while, all right, so then they go into some other stuff we don't need to cover, but that's pretty eye-opening. Get ready. The future is going to be wild. That's why I firmly believe it's not just about making money right now. It's about saving money, protecting money, protecting your value. Long into the future, you'll be okay. You'll have this cushion built up. But now, financial advice. I'm not a financial advisor. I'm just saying this is my humble opinion. I don't think people should bring in large amounts of capital and then you're just spending it. But that's what a lot of people do. They bring it in and they're just spending it back to zero again. Then you have to go work hard to generate that capital all over again. Well, what happens if we're in a financial crisis and that occurs? I'm not one who likes to put myself in a bad position. I like to put myself in the best possible position every single time. Live humbly, save your capital. Live humbly, save your capital. Live better in the long term. That's how I look at it. So anyway, now this article here is titled Chainlink. We got a little Chainlink article today. Chainlink soars 9%. Crypto analyst predicts next big target. It says Chainlink has performed strongly over the past week, with the token's price increasing 21.3% in the last 7 days. Some analysts have shared their predictions and thoughts on Link, suggesting keeping an eye on the token and its long-term performance. Well, I've been saying for a long time, I'm super bullish on Chainlink. They have everything going for them, powerful partnerships. The utility is off the charts. They're a beloved project by regular individuals as well as institutional individuals, companies. So I think they're going to do very, very well. But that's just my humble opinion. It says here, recently, Chainlink announced its partnership with blockchain platform Avalanche and the Australia and New Zealand banking group to connect the Avalanche and Ethereum blockchains using Chainlink's cross-chain interoperability protocol. As reported by News BTC, the partnership aims to facilitate the, quote, access, trade, and seamless settlement of tokenized assets across networks in different currencies in a process called delivery versus payment, DVP. The crypto community appeared to receive the news well. Ex-users expressed their positive sentiments towards the collaboration in Chainlink's token. The sentiment has seemingly translated to Link's performance, as the token's price soared 9% in the last 24 hours. Crypto analyst and trader, the Lord of Entry, shared his prediction for Link. In the X post, the trader highlights that the token's performance in the past day had been strong as it broke above the $18.50 resistance level. Chainlink's Link unsuccessfully tested the resistance zone over the past week, falling below it on March the 18th. Listen, partnerships are what drive Chainlink. I'm not worried about chart patterns at all. That's just my way. When it comes to something like this, no. Look at all the partnerships they're bringing in, right? That's what's going to drive it. That's what's going to make people continue to be bullish into the future. That's what's going to make Link blast off. Well, in combination with Bitcoin as well. When Bitcoin goes up, everything else will go up as well. And Bitcoin is looking at an astronomical liftoff at some point, I believe. I could be wrong on that. There's no guarantees, of course. But in combination with that, yeah, Link is looking super bullish. Same thing like with Solana and a lot of other solid utility projects, right? So now, let's move on here. All right. I want to get to some more. We got a lot of serious news today. A lot of serious news. So now this type of thing here. Well, let me just read the article. This article is titled U.S. Lawmakers Demand SEC Clarity on Ethereum's Asset Classification. So why the huge push for Ethereum when everything else that they try to say is a security, the lawmakers don't really care? Comes to Ethereum, all of a sudden they care. I find stuff like that very interesting, to say the least, right? For lack of a better word. It says here, lawmakers said that this lack of clarity has, quote, exacerbated, unquote, the uncertainty within the digital asset ecosystem and made it harder for companies to comply with regulation. Haven't we been saying that for the longest time? I mean, the people that support XRP, the XRPL. A group of Republican lawmakers, including the chairman of the House Financial Services Committee and House Committee on Agriculture, has formally requested SEC Chair Gary Gensler to provide clear guidance on regulatory stance regarding the custody of non-security digital assets by special purpose broker dealers, SPBD. The March 26 letter specifically demands clarity on the status of Ethereum and further requests the regulator to establish clear definitions for various related to terms related to crypto, digital assets, securities, and investment contracts. The letter was signed by 48 members of Congress, including House Financial Services Committee Chair Patrick McHenry and House Committee on Agriculture Chair Glenn Thompson. Lawmakers asked for a response to their questions by April the 9th. It says Ethereum status. According to the letter, the SEC has failed to propose a rule to provide comprehensive guidance for asset classification, and the term digital asset securities remains undefined. Lawmakers said that despite a public record from both the SEC and the CFTC identifying ETH as a non-security digital asset, there was concern over the lack of transparency in the SEC's SPB regime and the potential regulatory implications of allowing such custody services. Wait, they just said they're investigating Ethereum as a security, as possibly being a security. So then why would you even reference what happened in the past when they clearly do not care? It's like this passive approach to chastising an organization or, directly addressing possible corruption. It's just outlandish and ridiculous, and this is why things don't get done. There's a tough tone with anybody that's not a part of your government. But when it comes to other entities of your government, which should be held to a higher standard, there's not this toughness there. There's this very, very lackadaisical approach to chastising them and bringing things to where they can functionally continue to operate, efficiently continue to operate. This is one of the reasons why, I believe the West is having so many problems. There's just no one is held accountable at the higher levels, and they become very lackadaisical. They become very incompetent at what they do. I mean, no disrespect, but it's true. And so everything begins to break down. And over time, you see more and more of that breakdown. So you see the flaws, then the flaws are going to inherently be quite negative for the people. I think that's just logical, right? So anyway, hey, I figured I'd put that on your table that they're talking about this. Obviously, someone with big money, because this is not about the regular people, obviously, right? Someone with big money made them address this very quickly. Not that their word really means anything. We've heard them address the lack of crypto clarity many times over the last 3 years that we've been here, and nothing has ever occurred out of them addressing it ever. The SEC just ignores them. So, so now let's move on here. We have this. Oh, we have an altcoin season article. All right. At least that's what it sounds like. And I like to hear about altcoin season. So this article is titled Analyst Says Next Leg Up Incoming for Altcoins. It says a popular crypto trader believes altcoins are on the verge of big rallies after a pullback in the digital assets market. This is coming from Altcoin Sherpa. And it says, he says many altcoins are forming similar bullish price patterns with consolidation in a broader uptrend, shown in Render's chart. Render. So I actually just learned about Render the other day, but I'm not going to go into it. It's not something I hold. It's not something I'm super interested in. But he's using that as like an example. It says, next up, the trader predicts that Ethereum competitor Solana could dip to the 0.382 Fibonacci retracement level before rallying. So the charts, his chart reading is looking pretty solid, in my humble opinion. You go here and look. It's on the dailyhodl.com. So Solana is trading for $189.84 at the time of writing. I love that. It says, and I'm super bullish on Solana into the future. So up more than 4% in the last 24 hours. Okay, so listen. So Altcoin Sherpa is super bullish on altcoins into the future. Well, it's at least certain altcoins, right? But at least Solana is in there. It made the cut, right? So now let's go here. All right, let's go here. So now we have a little bit of BlackRock Bitcoin news. So this article here is titled BlackRock's Bitcoin ETF achieves legendary status after hitting second largest inflows for 2024. And it says quick take, Veta FI's data showcases the impressive traction of BlackRock's IBIT, marking it as the U.S. ETF with the second largest inflows year to date. IBIT only trails behind the Vanguard S&P 500 at ETF, which has garnered inflows of $21.6 billion year to date, positioning it at the forefront. Notably, despite IBIT's trading activity spanning merely, I guess, like 50 years or something. I guess that's what they were going to write. It cuts off right there. So listen, Bitcoin will continue to do well. We know they're bringing a lot of institutional interest. And another thing, there was an article we covered in yesterday's video. Once again, that was a good video, where they were saying that institutional interest is at an all-time high for institutional individuals who haven't gotten into Bitcoin yet, but they're thinking about it. That's at an all-time high, which means that there's a lot of potential money to be coming in the future, which then lends more credence to the idea that Bitcoin can have an astronomical liftoff at some point in the future, right? And I'm talking about potentially this year, skyrocketing beyond what anyone could believe, which then obviously would lift everything else, right? It'd be a beautiful time if that indeed did happen. So now let's move on here to another article. So then we have another Bitcoin article, and this one is titled, "This Cycle is Different. $86 billion in institutional money enters Bitcoin in just 6 months." This is coming from CryptoQuant's CEO. All right. So let's scroll down here. It says, the head of blockchain analytics platform CryptoQuant says that Bitcoin's current market cycle is like none other before for one key reason. Ki-Young Ju tells his 340,000 followers on social media platform X that the level of Bitcoin investment from institutional investors is unprecedented this cycle, totaling $86 billion in the last 6 months alone. Says CryptoQuant's data shows an explosion in Bitcoin's realized cap for short-term whales, or the value of Bitcoin at the price they were last transacted on-chain data, divided by the number of Bitcoins among the cohort. So suggesting a massive new presence of institutional money. Quote, "This cycle is different. Institutional funds of $86 billion entered the Bitcoin market in the past 6 months," unquote. You know, a lot of these articles, they repeat a lot of stuff greatly. Says the analyst says that buying demand for Bitcoin appears to be outpacing the selling supply as the liquid inventory ratio indicator reaches an all-time low. Quote, "Liquid inventory ratio reached an all-time low. Sell side liquidity is currently much lower than historical levels relative to demand," unquote. This is according to the analytics expert. The liquid inventory ratio is calculated by dividing the total sell side inventory by the 30-day Bitcoin balance change of accumulation addresses. So pretty much you break it down, keep it real simple. People are buying and holding more than they're selling. And I'm going to assume that's at certain points because we do have dips. But then we see it goes right back up very rapidly. So then if that continues into the future and we're looking at, if what they're reporting is accurate, of course, and we're looking at a substantial increase in the purchasing of Bitcoin, then yes, we're looking at rocket fuel right now. You know, we're looking at it fueling up, and it definitely could take off. So, you know, we'll keep our eye on it and we'll see how all this shakes out. So now let's move on here. And I believe we're going to close out with this article. All right. Now, this article here is titled S&P 500. S&P issues negative outlook on five U.S. regional banks due to office space exposure. I don't know why they phrased it like that. Just say commercial real estate. I think everybody's aware, privy of what's going on with commercial real estate at this point. It says here, higher vacancies trigger rise in criticized and modified loans as a maturity wall looms. S&P Global has issued a negative outlook on 5 U.S. regional banks facing an increased challenge from higher office vacancies as well as an increasing number of loan maturities on the horizon. First Commonwealth Financial Corporation, M&T Bank Corporation, Synovus Financial Corporation, Trustmark Corporation, and Valley National Bank Corporation were downgraded to a negative outlook from stable. Quote, increases in criticized and modified loans and increasing loan maturities may foreshadow an eventual material deterioration in asset quality and performance, unquote, S&P analyst Brendan Brown said in a research note. On the plus side for banks, however, most haven't reported a sharp rise in delinquent and non-accrual commercial real estate loans. Yeah, but last year we read a lot of reports that it's very hard, very difficult to get data out of these banks. Like, they report a lot of things late. Sometimes they don't report them. I mean, unless what we read was wrong. And, I don't think that it was. It's even very difficult to find out about data breaches from banks until it's like months later, years later sometimes. By then it's too late. Your data's already taken. So if they don't even report on something as crucial as that, why would they immediately report on something that's going to be highly detrimental to their reputation, right? And their bottom line. It says, just my humble opinion, it says S&P did not cut any ratings on the specific bonds issued by the banks, which still offer, quote, solid underwriting track records, unquote. This is what they're claiming, as well as limited deterioration in asset quality. Most of the 5 banks with revised negative outlooks currently manage more office property loans as a total percentage of their portfolio compared to their peers. Commercial real estate loans make up between 25% and 55% of the loans at each of the 5 banks as of the end of 2023, and S&P noted. S&P reiterated BBB issuer credit ratings for First Commonwealth Financial, Synovus, and Valley National. The rating of BBB is the lowest rating for investment grade debt. S&P stuck to a BBB issuer credit rating for Trustmark and BBB plus issuer credit rating for M&T Bank, including the 5 debt outlook downgrades on Tuesday by S&P. The debt rating firm now has nine U.S. banks with negative outlooks for a total of about 18% of U.S. banks that it covers. This is in 2023, S&P cut its ratings outlook to negative for Columbia Banking System and S&T Bank Corp. All right, so there you have it. More bank troubles. They're going down. They're going down. I don't see anything that they can do about this. There's no way to turn it around. They can't sell commercial real estate as apartments. That's not going to work. The people, it's not going to work for a myriad of reasons. The people are hurting financially. There's no one to buy those or rent those properties. Listen, times have to change. Old things have to go away and new things have to come in. New financial system coming in hot. Simple as that. If these companies want to make capital, they're going to have to adapt. They're going to have to adjust. And I think it's going to be more than just infrastructure. I think minds have to change. There's going to be a lot of shakeups coming in the next few years. But I can see them trying to congeal with a lot of these new technologies. Blockchain, they've already been attempting to. They haven't got a firm footing for it just yet because nobody wants to work with the legacy system. They just don't. They know how bad it is. They don't want to go down when the legacy actors go down. They don't want to. So that's why a lot of their products they put out and they say, oh, listen, we can compete. And it's like, no, they can't. You see them fail time and time again. They've all had these little blockchain projects. And what happened with them? Nothing happened at all. Just a bunch of bluffing and, puffing themselves up. But nothing major ever really happens. You look at FedNow. Take FedNow. Huge failure. But everybody was so afraid of FedNow. I told them there was going to be a nothing burger, and it's been a nothing burger. Just a few organizations connected to it. We read the articles you saw, right? But I think they're going to have to more rapidly congeal with the fintechs, with the private sector, because we do it the best, and they know that's where the money is, and that's the life preserver. Same thing they're going to have to do with AI as well. It's not that they're going to have to replace people with AI. They don't have to. They're going to need to. They're going to need to. It's not because they want to, because they love that control. They love that control over people. But the thing is, the people are saying, hey, listen, we'd rather go somewhere else. We'd rather work somewhere else. We'd rather do business in another way. We'd rather do decentralized financing. I'm just giving you examples of people choosing alternative paths to dealing with the legacy system. And there's a lot of that happening. It's the same way where you see a lot of people stacking cash. We read a lot of articles on that, right? People just stacking cash. They don't want to trust the banks, or people are now buying silver bars, gold bars to protect their capital and value. They're not going to banks. So there's a lot of people doing that. So I think that they're going to have to, if they want to survive, they're going to have to adjust. Time changes all things. And the banking system is no different. Governmental systems as well are no different. Time changes all things. They'll have to utilize blockchain. They'll have to utilize artificial intelligence. They will. And now you see how blockchain actually is a good layer for artificial intelligence. As they say, it will bring more decentralized data to artificial intelligence and keep that data protected. This is what they claim. This is what the articles I read say. So, you know, the world is changing overnight, folks. We'll see how it all shakes out. Right now, it's looking good for us. It's looking bad for them. Right. That's how I'm perceiving it. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. And until next time, let's get to the money.